Good now, revolutionaries, and welcome to the Rise Up Morning Show.
Good morning, the Rise Up Morning Show.
Today is Wednesday, February 11th. We're back for another episode with helpful news, commentary, answers to your crypto questions. And today I am so thrilled to tell you we are joined by our returning friend, JSB, founder of Carrot, and our longtime friend, first-time guest on the show, Dara, head of marketing at Gauntlet. Welcome, gentlemen, to Rise Up. How are you today?
Doing great. Thank you, team, for having me on. Fan of the show. I think especially in this market where, everyone's talking about the institutions, but who's talking about the people? It's Rise Up. So yeah, very happy to be on with y'all.
Great. Oh, that was so nice.
Who's talking about the people? Rise up, baby. Heck
Dude,
yeah.
for
The
real.
check is in the mail. That was
No one else in crypto, that's for sure.
Ugh.
No one else in
Oh,
crypto, that's
man.
for sure. God.
Dude,
We're going to
yeah.
onboard the masses. Meanwhile, hey, BlackRock. Hey, BlackRock. BlackRock,
Why is
please
that?
talk
Why
to
is that a
us.
thing?
Money.
That like we're all so collectively excited to hear about BlackRock all of a sudden. I thought they were the bad guys, and now we're all bootlicking them, which is deeply
Well, you
upsetting.
see, Alex, money.
Money. I know.
Money.
Oh my gosh. JSB,
For
what
them,
about you, man?
not for you.
doing okay?
Yeah,
Yeah, man, I'm great. I'm sure maybe we'll touch on it or not, but just the shipping velocity has just gone insane. So it's been a really fun, I'd say, last month, 2 months through the year. Maybe the end of last year too. So yeah, I'm having a blast, which I think for any founder like that's like the right sweet spot to be in, where you like feel like you're getting your stride on a lot of stuff and having fun building because you feel really clear on what you're building, which is great.
Just really quick, do you guys want to introduce yourself for folks who don't know what you do, what your protocols do? Tell us a little about you, Dara. Do you want to go first?
Yeah, absolutely. So I'm Dara. I'm the head of marketing at Gauntlet. And for those who don't know, Gauntlet is the leading risk manager in DeFi. And what that means is that since 2018, our risk models, our quants, our math nerds, our data scientists have been building models that protect some of the largest protocols in DeFi. At any given point, nearly a third of all total value locked in DeFi is covered by our risk models. And then the other thing we do is we build yield strategies on blue chip assets, stable coins, Bitcoin, wrap Bitcoin, ETH, and our job is to build institutional grade yield strategies that allow, one, because they're non-custodial, built on protocols where anyone can supply capital, available to anyone in DeFi, which is very important to us. But also we're building so that the largest fintechs, the largest financial institutions in the world, we want them to offer these products too. And so that's a major focus of the work we do.
Yeah, and one of your, I don't know, do you call them clients? Do you call them partners? Somebody who has worked with you to have a vault curated is Carrot.
That's right.
Yes. Yeah. Carrot are fans. You can, like any really strong DeFi protocol that's making it easier for users to earn yield, you can go to Carrot and you can see all their allocations, including Gauntlet vaults.
That's right.
Okay, cool. So pass the torch, JSB. Tell us about you and Carrot then.
Hey, well, I'm James. I go by JSB most days. I'm one of the co-founders of Carrot, and really Carrot's all about making DeFi easy and accessible for everybody. And for us, that starts at like a really foundational like UX level of how do we make these products easy to understand, easy to onboard. And in our world, that's tokens. And so a lot of our products are tokenized products. So we tokenize different methodologies, different strategies, including a Gauntlet strategy, which is great. A lot of intersect over that of the actual risk management curation layer, and then the actual like consumer touch point. How do you get access to these products? How do you use these products? How do you track these products and monitor them? So we have a number of products. I'm soon, the thing I've been building the last, month now is finally our unified Carrot experience. We call it Carrot United, like a soccer team, and it brings our products all into one house. Because we have our CRT product, which I know is what I was on last time when we talked, which is our up only token, which looks fake until you realize that it's a stablecoin yield token. We don't call it yield bearing stable because words matter, and definitions of stuff matter. So we've got that CRT, and then we actually are a VAR Lend protocol. Most people don't know this, but Carrot Lend powers our turbo tokens, which is monitored and protected leverage wrapped in a token, and then our boost product, which is like yield looping. So all that is the Carrot ecosystem that we're finally bringing under one roof here pretty soon.
Yeah, you said that it looks like a scam. The very first time I think we ever showed it on screen, this was the chart that we showed. And for people in podcast land, it just goes up and to the right. And that's because this is a token that accrues yield. That's its whole job, based on a basket of underlying assets. We talked about it a lot on the show. And Dara, what's the technical term? You called it a minute ago. Tokens like Carrot are a it's another synthetic wrapper, but you had a term for it. And
I was saying wrapped Bitcoin and wrapped Bitcoin, I think, and then liquid staking tokens on the Ethereum side and Solana side.
But something we're starting to see, and I know you both are very involved in it, are these like tokens. This is going to get so meta really quick. Tokens are an asset. They are a symbol. They represent something else, like dollars do. But now we have these tokens that represent other tokens, a synthetic asset for a synthetic asset. And we've been saying for a long time, we expect to see this kind of thing a lot more, or like a vault token. That just represents your underlying strategy. You buy one token, you can manage its performance and see something like that instead of this single speculative asset. But I imagine both of you have seen that accelerate over time. And I'm especially curious, Dara, from the Gauntlet perspective, because you guys have watched lots of other protocols do this. What's the state of that? And where do you see it going, as products like Carrot accelerate it?
Yeah, I think there are a few variations of this. It's a very exciting time in DeFi, despite what the price charts may say. And the reason for that is, I think there is this Cambrian explosion of consumer-friendly DeFi experiences. This is one flavor, I think, tokens that represent, either a basket of assets. That concept, you could take as far back to say even DAI, where makers backing the stable by a basket of crypto assets. So exciting, right? Even when you compare what's happening on the more centralized side of stable coins, the fact that there's that kind of variety is very exciting. So I think one, abstracting at the token layer where you hold a token and it either represents a direct claim on or is a receipt token on a basket of assets is very exciting. And then vaults are the other, I think, very, very exciting abstraction layer that, undeniably over the past year, despite the market chop, we've gone from under $1 billion of, not just Gauntlet, but across this category to, I think the high watermark, was over 10 billion, and we're probably sitting at like 7, 8 now. So much of that is stable coins, which is also very, very exciting stuff. So yeah, I think, the TLDR is, you do not have to be moving in and out of positions and airdrop farming and doing all these complex activities and trying to treat yourself like a hedge fund of one. There are a variety of abstractions that allow you to, you can pick your risk level. So if you're very risk on, like for example, you're showing app.gauntlet.xyz, we have 3 categories of risk across most of our vaults. There's prime, which is very conservative. The goal is capital appreciation. There's balanced or core, where we're a little more risk on, but a majority of the vault, and you can go see, by the way, if you click into any of these vaults, you will see the allocations. Nothing is more important than showing transparency, at the right level of detail that anyone can go in and take a look. So if you go to allocations there, you'll see exactly what this vault is allocated to. And so, yeah, then there's Frontier, which is more risk on. That's our third risk category, where we will make some riskier bets. We still want to think of them as, risk and reward. We're thinking about these as risk adjusted yields, but we're more risk on in those vaults. And so, yeah, you have these different flavors so that even if you want abstraction now, which is very exciting, you have these different options and you have these different risk levels. As always, it's very important that you understand who's your counterparty, who is managing the risk of these vaults, what is the history of the protocol, what is the safety and track record and transparency. Is this organization based in a very far away place, or are they, are they based somewhere where you trust that they have a duty to report and be open about what they're doing? So those factors are all still very complicated. That level of abstraction, I think, comes as the industry grows. But yeah, that's a long-winded way to say it is a super freaking exciting time in consumer DeFi, especially. And yeah, I just expect that trend to continue this year.
Well, it's interesting, and I do think there's this element too of people are just more primed to want structured financial products, right? Just our generation's coming up that's coming into their prime earning years of their careers have been taught to buy index funds. Don't pick stocks. Picking stocks is a losing game. And just this idea of structured financial products, I think, is a lot more normalized. And the power of crypto and Gauntlet, helps this tremendously. Is how it is wild to think about. How do we permissionlessly allocate funds to somebody else on the internet who's going to manage that? And I feel comfortable and confident doing it. It's not a brand like Fidelity or Bank of America or Chase or whoever that I'm like, that's a trusted intermediary. I'm literally saying, I'm just depositing, clicking a button. I'm going to put lots of money in here, and I trust that. They can't just steal the money away, and they can only allocate it in these certain ways. And I love that. Trust that. Like that is a huge shift, maybe underlying that makes it like really powerful. But it fits in this framework of like, oh, I expect and like structured financial products better than me trying to do it on my own.
Question, just on the topic of consumer products in DeFi, because it's funny, when you said, consumer DeFi products, I was like, wow, what a fresh term I haven't heard come out of like a crypto person's mouth in a while, which is sad. But I'm curious to kind of get both of your thoughts, like as people who are, liking to focus on this and build products for people in a space that seems so focused on institution and institutional adoption. Just kind of like what your taking is of the culture of the DeFi space and DeFi builders. Is there starting to be a little bit more of the group of people who are builders in the space trying to build consumer level products? Because like I feel like there's a huge hunger in the space right now, kind of bred out of the disappointment of this past cycle where like the only things that were really built was meme coins. Every project wasn't really building projects for people, but we're building them for institutions. And I do feel like there's like the old guard that's been in crypto for a while is looking at institutions as what was going to be a savior and looking at them almost like they came in and just kind of destroyed the industry that we all loved, or at least didn't destroy it, but killed the old world and they're building a new world. And I get a sense that the old crypto heads, the old DeFi heads are starting to kind of turn away from that, has been my sense. So I'd be curious to get your opinion on if in the past few months you've noticed more people being like, hey, we got a little too close to the devil. We want to get back to the core of crypto, which is to like help the people, build products for the people, kind of stick it to the man a little bit. Have you noticed any kind of shift there in the culture and the trend and where people's attention are?
Yeah, I think so. Let me say first, lest my counselor remind me that anything I say are my personal views, don't reflect the views of Gauntlet. And overall, encourage you, do your own research. You can find all the details on our products at app.gauntlet.xyz. That being said, let me address this head on, William. When I say consumer DeFi, yes, it's very important to me, especially someone that came up into crypto at Kraken, during the last cycle. The first things you are taught there are one, to be productively but extremely paranoid. Build your OPSEC profile before you can even open Slack. The second thing is, I was introduced to so many people that were working for an exchange, a CeFi, centralized exchange, centralized entity, but had such deep DeFi principles, had such strong self-sovereign principles, whether you were Bitcoin maxi, there are lots of early Solana fans, many of whom have gone on to do great things. Like the team at DFDV are all Kraken alumni. But one thing that was instilled in me, William, was the individual matters, and their access to this new financial system matters. What I would say is what is happening now, I think it's very easy right now to be skeptical, seeing institutions take such a deep interest in crypto, especially following the Genius Act. And believe me, that floodgate will open, or at least it's my view that floodgate will open quite a bit if and when clarity passes well. I'm confident, I think it will. And what I would say is for Gauntlet, and one of the most exciting things for me over the past year is I used to work long ago, I'm quite a boomer in this space, but I was a fintech management consultant and worked on some of the early mobile payments platforms before there was Apple Pay or Google Pay. And I guess what I would say is this: the institutions do matter for consumer adoption. So I think at some point, everyone, and maybe it's during the chop of this market, is going to have to look in the mirror and say, do I believe a version of consumer DeFi that is people only going straight to the bare metal and accessing DeFi at the protocol layer, at the individual wallet EOA layer? Or do I believe in a world where smart wallets are very, very exciting? I think they are. Major fintechs, not just crypto natives. We work with some great ones: WireX, Cast, Nook. These are all, we work with Carrot. These are all teams that are abstracting DeFi on some level, and that is the key. The delivery mechanism, seeing institutions come in and take an interest in this, is extremely bullish for me. And by the way, part of the value of this whole thing is that if you really don't like your provider, the one that's helping you sort of make this a frictionless experience, you can still take your wallet, you can still move your funds, and you can still go deeper down the rabbit hole if you choose. But we'll never see crypto adopt if we don't really get people out there. Yeah, I don't know if that's the bell to tell me my time's run out, but I feel very passionately about this.
It's a good point.
Sorry, I forget
Okay.
the first time on the show. That is the bell that means you get
It's
a
the
point.
agree bell. Yeah, cool.
No, it's a hell yeah bell.
I could talk about this. I could be on the pulpit for days about this, but I feel that passionately that it's. And again, I'm a crypto boomer, but I did come up with these people, and like we were talking about this before the show started. I remember this bifurcation where there were Bitcoin maxis and crypto maxis that only wanted people to basically operate, on the bare metal and nothing else. Anything else was, crypto giving up its principles. And then there is a group of what I would say are more pragmatic people. I'm not saying either view is wrong, but I'm in the camp where I believe pragmatism will accelerate the industry forward. These institutions coming in are very exciting because inevitably it means that more people will get exposure to crypto one way or the other. And then I think a lot of people will fall in love with it and go down the rabbit hole deeper and seek to custody their own assets and, be sort of a more sovereign individual. But it takes time, and the institutions have a role to play.
Excellent question, Will.
Yeah, I mean,
Awesome. Appreciate it, Dara.
I also love this topic. I could speak for days on it. Can geek out. Is also a crypto boomer over here, and I've gone through a few cycles now, and particularly may have more insight on the builder side of like how are founders feeling. What are trends that we see of what people are excited about, partnerships we see come through our door. What's being built, and it's a funny thing because maybe it depends on when you came into crypto and what you think crypto is all about. Kind of like Dara is alluding to here. Like, are we using crypto because it's novel, it's cool, and we like the self-sovereignty idea, or are we using it because it has a business, sense of it's faster, cheaper, more secure, and has superpowers and lets you build stuff and gives you primitives that unlock things you couldn't do in your Web 2 architecture. And I think I've seen this trend towards the end of the cycle. Anybody I know who's building consumer DeFi is working on abstracting crypto away. So it's not connect your wallet, it's log in, it's add your account, it's abstracting away. Your Privy has done great work. Excellent acquisition by Stripe on that because they make it incredibly easy to spin up a iOS app or a native app of wherever on any platform, really, whatever code base you want to work with, and kind of build embedded wallets directly into your experience. Abstracting away, making, hey, you don't need to care. And this kind of falls into the second camp of there's a business case to be made here. If I can make products faster, cheaper, that have superpowers that I couldn't do if I was just running my own isolated database or running on some network, wherever. on the flip side, on the institutional, is there's another class of people who are building the products that are helping power consumer DeFi. So we see us as like that layer. Maybe we kind of maybe sit in the middle a little bit here, where, hey, if you want to build a neobank, if you want to build a betting experience, or like whatever app you're building that crypto can allow you to do it uniquely, we can power that yield layer. And so in a way, we're kind of figuring out that sometimes we fit into this like B2B2C category, where we build infrastructure and products and things that they can integrate with that enable them to build better consumer experiences themselves. But it's interesting because for the most part, anyone I know who's building consumer DeFi, they don't talk about it being consumer DeFi anymore. It's like, oh, I'm just building a better bank, I'm building a better app, I'm building a better this. And they're like pushing crypto to be silent behind. Not bad. A lot of people will say like that's finally a good thing that we don't force feed, you got to be a crypto maxi in order to use crypto products. So that is an interesting, I think, dichotomy. I've never seen crypto sentiment so different between people on the inside who are like building the industry and people on the outside who are like thinking about the industry. And to me, that kind of splits on like, consumers were taking away the crypto stigma, and institutions like, oh, we're all in. How do we build more things that unlock potential use cases for us?
Okay, this is great. I would like to dive in to start asking you guys some different questions that will be practical for the audience. Let me remind everybody listening in podcast land that you can find the video recording, because I will do some screen sharing, on YouTube. Search the Rise Up Morning Show. We've got a whole playlist there. Or just remember rumshq.com. The best place to connect with us is there. You can get the link to the community. community.rumshq.com. It's a great place to ask a follow-up question, get connected to the resource. If you're on TikTok now, or if you're in the future now, wherever you are, whenever you listen, that's the place to go. community.rumshq.com to follow along. And some of the websites that we're going to cover are gauntlet.xyz and use.deficarrot.com, or just deficarrot.com will get you there. I feel like it makes the most sense to start with Carrot, because I think we've shown it on the show most recently. I know you've shown Carrot. We've talked about it. I'd like to answer some questions about Turbo specifically, because Will has been on a adventure to learn perpetuals and leverage trading. We've talked about that token and gotten a lot of different questions. I know you wanted to show Boost too, and I feel like that will kind of set us up to make a really good direct leap. Dara, I'd like to go back to the mini app and then say, okay, if you want to branch out to other ecosystems, you're comfortable with this mechanic, you're exploring vaults, we can show people how to drive through that platform again and use it to, start playing around with something that matches their risk appetite, or look up information for a vault they want to research. Sound good, guys?
Yeah. Yeah, let it rip.
Let her rip. Okay, cool. Then let us pivot to Carrot. Use.deficarrot.com, and I'm going to take us right to turbo.deficarrot.com.
Yeah.
That's the handle you need to know. And then I'm going to put it on the screen, and I'm going to kick it off to JSB and Alex and Will for questions. Hold tight. Carrot, Turbo, boom. So, James, what is the Turbo token for people who are just catching up to us? We've talked about it on the show as like a token that represents an underlying leverage position, but like, what's that mean? What actually is happening here?
Right. Maybe I'll start a good narrative of how we got here. Like, why we built this. And the reason for it is for whatever reason, in every cycle, no matter what, perps is always a darling of the product market fit goal. There's always a market for someone who wants to take leverage. And as Will, I'm sure, can attest, like, leverage is kind of scary. It just is. It's easy to lose your shirt. It's easy to not really know what you're doing, get it wrong, and all of a sudden, like, you've lost your money. And it frankly, it feels like gambling. And most people I know who are using perp dexes, they treat it in a high leverage small window. What I mean by that is you're going and saying, hey, I'm entering in this position. I'm leaving it open for maybe a day, sometimes an hour, sometimes a week. You have an entry point, you have an exit point you're trying to do, and you're saying, hey, I'm expressing my opinion that I believe the price is going to move here or move here. It's going to go up or down. And I have a strong conviction about that. So therefore, I'm going to take leverage, or I'm going to have a larger size than my deposit value to get outsized returns relative to like my allocated capital. If maybe that's helpful for like what is leverage. This is all well and good, but for us in crypto, oftentimes just token ownership is how we express our bullishness on assets. So like you love ETH, you love Bitcoin, you love Solana, and you're like, great, I'm going to hold this for 3 years. I'm currently in the 3 or 4 year camp of my Solana that I'm holding. And if I have that opinion that I believe in this asset long term and I'm willing to hold it for that duration, then just the idea that I might take a little bit of leverage, use less capital in order to get more exposure to express that opinion that I have about the asset, I would do that. So that 2 to 4x leverage, let's say, like on Solana. The problem with this is, one, it costs you something to keep that position open, right? So you're borrowing money, you're trading on margin, you're paying a rate in order to like have the increased exposure, but you also have a ton of risk. You have to monitor the thing. So even if you believe that it's at $100 and it's going to 150 and you feel super confident and comfortable to hold that for 6 months to wait for that to happen, what if it drops to 75 and then 60 and then hits 150? Well, maybe you got wiped out. And so you were directionally correct, but your execution was poor. And you didn't actually realize that sentiment you wanted to express through the trade. And so turbo tokens, the way the leverage is achieved is actually through borrow lend. It's a looping strategy. At Carrot, use.d by Carrot, it's the up only token. We get that by aggregating yield across tons of DeFi products. One of those DeFi products is our own borrow lend protocol called Carrot Lend. Now you don't know about Carrot Lend because it's the underneath that the products are built on top is kind of abstracted away. But for SOL, essentially what we're doing is we're buying SOL, borrowing against it to buy more SOL. And you do this until you kind of hit your leverage target. Now, what you really want when you have that position open is you have this kind of range. And you might say, hey, I'm okay if it gets up to maybe 4x, but anything over 4x, that's a little too leveraged. We're getting closer to liquidation levels. I would like manually adjust my leverage down. Or if it's down the bottom end and I'm winning, because our leverage metric is really just a calculated metric. It's saying how close are you to your liquidation levels. So as price increases, leverage decreases, and as price decreases, your leverage inherently is like increasing. And so we had a lot of people who are using our Boost product, which is a one-click manual version of leverage. And we got a lot of feedback of, man, I wish someone would kind of manage this for me. And we're like, we like managing things for people and we like putting them in tokens. And so this idea that you could hold a token that could survive volatility and express a bullish sentiment without you having to worry about getting liquidated felt perfect for us. And so that is the design of the token. And these products traditionally have really been tailored towards a trader. And they're traditionally marketed as like a 3x or 2x, kind of a peg leverage type style instrument. And people use that mostly for like hedging purposes and different kind of strategies that they're like integrated into rather than it itself being the product. And the reason they're bad products when they're pegged to a leverage target is volatility decay. Volatility decay is kind of this big problem to try to solve, and why they're usually not long-term instruments, they're short-term instruments. And volatility decay is that example I mentioned to Will there is, hey, you're entering at 100 and you believe it's going to 150, that's your exit. And can you survive if it goes to 75 and then to 120 and then to 50 and then to 150? Volatility decay, if you have to rebalance at those points, essentially says you did worse than if you had just held, because now you've like sold at a bad price and had to buy in at a bad price essentially. So you're always selling low and buying high. And so volatility decay makes the product really tough. For us, we feel like we solve that by having this range, where as long as it's inside the range, we're not rebalancing, so your collateral base doesn't change. So you have the same amount of SOL that's backing the leverage. And so this allows it to express, hey, I'm really bullish on the asset, on the asset, and you can now hold it for a longer period of time, because if it does stay in the range, your returns not getting eaten away by volatility decay, which is huge. And we've got these managers that if it reaches 4x, it gets rebalanced to 3.9. So this is our methodology of kind of how we keep it from liquidation. We don't say no liquidation because there is a liquidator. It does exist. We can't say that, but we do say it's protected from liquidations because way before it gets to the line, I think something like 12x is actually the line of what liquidation would be. So anything above 4x, we're rebalancing to 3.9. So it keeps that in. So you're never going to lose your shirt, which is a huge benefit.
JSB, can we talk about the rebalancing just a little more? I'd like to show something on the screen so that people can understand how to read it for themselves. So you tell me where to go, and you mentioned the Boost product, so I've got a question about that too. But I'm looking at Turbo Soul right now, and we can see
that big drop right there.
This is leverage specifically that we're looking at too for people who are trying to navigate this. You can toggle between the price of the token on a zoom in or out time frame and the leverage that is being applied to this token on an in or out time frame. And I'll zoom out a little so everybody can see it. But
zoom out a little bit on the leverage because it highlights exactly these little jumps. So this is a perfect time frame right here. Okay. So maybe I'll explain kind of what this chart is representing. So one, let's just remember that leverage is a factor of maybe just think when price goes down, your leverage is inherently going up in a borrow lend leverage scenario here. And as price goes up, your leverage is going down. And so this chart almost can mirror and show what the price chart would have been doing. So you can see we've got that min, that max lines, the 4x and the 1.5x. And so you'll see in this early period over there on the left, this pretty choppy action. So this is when we're having a lot of market volatility. This is when things are really tanking and crashing. And so these little peaks and valleys, these little waves at the top, that is our manager, our vault manager, rebalancing when it hit 4 to come back to 3.9. And that is like an adjust leverage operation. So we're selling some collateral in order to pay down debt to reduce our leverage ratio. This is what's helping you not get liquidated. This would be the same as if you're babying a purpose position and you are taking chips off the table. Now, at that point, you are kind of losing, right? Because you're selling collateral to pay down debt, but your net value is staying the same. So this move doesn't have any bearing on vault equity, which is how the turbo token price is derived. The bigger, cooler thing is, let's look at that big drop you see. This looks concerning, like big drops, that feels bad. What's happening there? One of the methodologies that we kind of pioneered to combat volatility decay is what happens within our 4 to 1.5 range. How do we rebalance, kind of nudge it to the leverage that we want? And the way we do this is we use trader flow. So when a trade comes in, we kind of append execution instructions onto it that says in line with your size, if our target is 3x and the vault is currently at 3.9, we're going to use your trade entering into the position to reduce leverage to 3x. This bears the cost to the trader, but the pool is not affected by it. So this is a huge design improvement. You don't want other people's trades affecting your position. And so we use trader flow to kind of move and nudge that leverage. And so in this case, I happen to know that we had a very large position come in. And because of that position,
you're welcome.
that trader essentially, thank you, Alex. I didn't want to say it flat. That position was used to move our inside the bounds leverage back closer to our target. So this is really good. And so normally we see anything that's kind of hitting the top line and coming down, that's the manager coming in. And that does start to bring volatility decay in the picture. Because again, we are making some moves. We are making trades. We're essentially selling low and buying high later. But using the trader flow is a huge unlock. It's a really cool mechanic for inside of.
Let me ask you a follow-up question, which is down here, you've got some more data that curious folks can look at to learn about this particular position. And you've got two smart contracts here that somebody could look up on a blockchain explorer. You've got the token address and the vault address. Can you help me understand the difference between these and which one of them I would look at to see, for example, how this leverage manager is monitoring those? What can I see at these things?
Yeah, so the token address, well, maybe I'll start with the vault. So the vault is the actual place where the funds are routed through. The vault is who owns the position for the boost or for the leverage. So that is the one that has taken out the loan, that's the one who has deposited the collateral. So they now have this account with the bank that says, hey, I've deposited this amount of SOL and I've borrowed this much, debt against that deposited collateral. The token is similar to like a liquid receipt token. It's like a tokenized vault where you're saying, hey, we've got this vault. It is running a strategy. It has an equity value. And then based on your deposit, you are getting your proportional share of the vault as a token. So that when you come to redeem it, you are getting your value back out. And so the token part is the SPL token. It's actually token 22 that sits in your wallet. We're working on making them look better, indexes, but that is the idea of, hey, I can manage and monitor my perp position just by looking at the value of the token that sits on my wallet, rather than having to like log in, connect your wallet, go look at the charts and see your position right there. It's very similar to CRT in that regard, where you have shares that are backed by the equity value of the vault and kind of your proportional deposit value into it.
Something I was really curious to find is how I think this is a great product. And I feel like everybody in Solana who knows how to do this would be using it. I was shocked to see that there were 131 holders. To me, that was like a low number. Obviously, this has been trending upwards over time. But something we talk about a lot is like, hey, if you're in a position and you're doing DeFi, a risk you should consider is how deep is the pool? Not just in terms of dollars available, but also in terms of like how many people are there who have to say, see you later before it's just you.
It doesn't matter.
Oh, sorry, go ahead. And that's what I'm getting to is, can you, somebody who sees this is going to say, wow, somebody's got 30% of this pool, 24%, and there's only 130 people in here. Why would you say, maybe that is a good or bad metric?
Throw out everything you think you know about tokens. This is a whole different category and class of token. It's a liquid receipt token. So it doesn't matter how many people are in it, how many shares, who owns big portions. There is no LP pool here. The leverage is not derived by having counterparty on other traders, in the instrument. It's not synthetic. It is a tokenized borrow-lend position, if we want to get down to like what the primitives underneath here are. And so similar to CRT. So CRT, the pool value doesn't matter for the like the token's price is not derived on the DEX liquidity or traditional, like how most tokens get their price. It's a receipt token. So you can mint $1 million and the NAV price is going to stay exactly the same. Same with turbo tokens. So like your entry into position is not affecting the price of the token. And frankly, the price of the token doesn't matter. So we even think about this in our UI here of people want to see like the charts and like, oh, do I like this chart? Is it looking bullish? Is it looking bearish? I would say like the relative number of the price of the token actually doesn't matter at all. All that matters is like your entry into it and where you enter into it. So we could have started at $100. We started at $1, just because it's easy. But it doesn't matter if it's 11 cents or 8 cents. It just matters where your trade entered into. Because again, that token price is just a ratio. It's just how many shares have we issued and how much equity is in the vault that are backing those shares. And as the vault performs, the leverage is doing its thing and it's winning, then the notional value of the vault equity is going up, and therefore the price per share is also going up.
Yeah. Okay. Excellent. The follow-up question comes from Bearded, and this is a $5 way to say, have you ever experienced any issues due to like the Sol network or an oracle that you use to get price information with these leverage positions? Have you ever had like a close call where, oh man, it looks like we're going to get liquidated if we don't get good information soon, or something like that?
No. And we've done a ton of back testing. We worked with a great company who helps us run back testing on actual like replay events, so that we can replay the chain over a period of time to like simulate transactions, which is super helpful, better than just guessing. I think great risk management is proactive. Risk management is not reactive. If you are being reactive, you are not doing risk management. You are reacting to bad things that are happening and that you need to protect against. And so this is why we build tons of margin and tons of checkpoints into the system. So that max leverage of 4x, thing I mentioned before, I think technically, if we were to look at like what is the liquidation price of the turbo token, it would be closer to like 10.5, 11x. And even then there's some margin for like the liquidator to have enough room to like, what is a liquidator? Liquidator is selling collateral in order to cover bad debt before you reach, negative equity value.
Yeah.
And you pay a fee, along the way for that. And so it hasn't gotten close. I would say we are very good at landing transactions and making sure that our infrastructure is such that we're like very good at that. More likely than not, what happens is actually protection mechanics where we say, hey, the prices diverge where we have a low confidence interval on what the oracle is telling us this asset is worth compared to what we are able to redeem it for that are maybe outside the bounds. And so we might fail a transaction. So maybe the difference of like, we fail a transaction because it goes through a gate and says, oh, we shouldn't pass because this looks way off, versus like transactions not landing. Very, very different. Sometimes we see failed transactions and think like that's a bad thing. Failed transactions are actually usually a very good thing, because there was some check, some reason why that transaction should not have confirmed. And as a user, you might be glad that it did not confirm because you might have gotten a horrible price or something. And so, yeah, I would say at this point, I've been at Solana from the chewing glass days, 4+ years being here. The concerns of chain liveness, I would say from my experience are they do not keep me up at night anymore.
Yeah. And, a user question that we get a lot that we send to you is, hey, somebody's having a transaction failure or whatever. And the response is usually, well, just, give it a second or whatever. And they say, oh, it was usually my slippage or usually this. A transaction failing is definitely in a time of big slippage or whatever is definitely a good thing, because then you get what you paid for. You don't get shorted. You don't end up paying too much. You alluded a minute ago to Boost, and this is not a product that's live yet. That's correct?
No,
this is coming.
Super live. Boost is predates Turbo.
Okay.
And I know we do a horrible job of giving it a single app interface to see all our products. It's coming soon.
No, that's okay. So, but Boost was, you were saying like the manual adjusted classic leverage, like you can play with it if you're an experienced trader and set it yourself, right?
Yeah, so Boost we typically use for yield loops. So this is on my C, which is a great RWA. It's a reinsurance asset, and essentially you're saying, hey, my asset on my C is currently yielding at 10%, 10.25. This is awesome. My current market rate to borrow against assets, let's say, is around 7, 6, 8%. Somewhere in that range. Your light bulb might go off and say, hold on. So I earn more with this asset and I can pay less to buy more of it. That sounds nice. And this is what we call looping. So it's a very popular DeFi position, now of looping assets where, again, you are buying the asset, depositing it, borrowing against it, a certain loan to value ratio, in order to go buy more of that asset. This is how we get leverage. So you own more of the collateral than you do of the debt. And as long as your debt is costing you less than what your collateral is earning, you now have this much bigger leverage exposure to the yield. And I love this UI. I spent a lot of time, I'm very proud of this, of really illustrating what is a stable loop asset doing, like what is this position doing? And you can literally see that the value of the collateral is growing faster than the cost of the debt, the red lines, and your net value is increasing as a result. That is what looping is, and it's just a form of leverage. It's not a synthetic, which we love. It represents real token ownership. You're playing with perps. Perps are synthetic. They don't actually represent and show buying activity for the token, because what you're buying is a synthetic product between a short and a long position.
Yep.
Here, because it is token based, it is borrow lend based. You're buying the NYC token on market, and that is a bullish signal to show people that there is demand for such a token. And you can see like this, essentially, this looks up and to the right. It's nice. There is more risk in here. You are taking leverage. It can get liquidated. It's unlikely to, but it's DYOR. It's DIY. You got to manage your own position with that, and that is a risk. But this again is built on Carrot Lend, and so CRT is providing the liquidity, which is underwriting the borrows here, just like we allocate to Camino and Market Find to Drift and Project Zero and a few others.
Well, it sounded like you had a thought. Oh, go ahead.
The setup for a boost position is obscenely easy. Took about 9 seconds, and I do
hopefully
really.
it's educational.
No, it's great. I really like the dashboard. I keep telling you this. Like when I the thing that gets me more than anything else is a dashboard that makes it really easy for me to understand at a quick glance, like what it is that I'm sitting on and what am I looking at and what has it done for me or what has it not done. And if you look at this particular screen, just seeing it laid out like this with your collateral compared to the borrow debt position, and then right here you have your earning APY and your paying APY right on top of each other at the same time, which is great. It's just, and plus you don't actually need any crazy assets to even participate because there's USDC deposits on everything.
Yeah. We like to make it easy.
Bullish.
Yeah, and so even like a turbo position is actually just a tokenized boost position that's like unified liquidity. So it's a single position.
We set it so you can forget it.
Right. And you don't get to see this. You don't have to see this. You just know that we're managing that for you, and giving you upside when price is going up, and protecting you from downside when price is going down.
And then we'd love to know just about the future of this. Like we have a question about boost points, whether or not there's going to be any kind of future redemption value, shorting. What are you guys cooking?
Yeah, man, we got so much stuff. It's wild. Once you have this base primitive of a borrow lend protocol, there's so many great products you can build on top of it. And really, those are the consumer DeFi products, right? So it's one-click automated leverage is awesome. To realize that you need a borrow lend protocol to like take the position out and do the management side, and you need a liquidator and you need accounting. I mean, there's a lot of stuff underneath the hood. But it's these products that most people are going to interact with, a multiply, a loop, a boost, a turbo token. You don't know that's really built on borrow lend, but you're paying APY that's fueling CRT right there, which is awesome. So we're building a unified interface where you can see all this in one place, your CRT, because this is essentially, we've got 3 different risk profiles, right? So CRTs are our lowest risk profile. It's not only, it's stablecoin based. It's like your savings account, use that. 2, you've got boost. So boost is mostly like yield loops. So it's JLP, FLP, ONYC, and some others that we've got coming out where you can take leverage on yield assets in order to get leverage exposure. A little more risk, you can get liquidated. They're structurally set up to where that's unlikely, just by the nature of what the asset does. But there is risk and you have to manage it yourself. And then turbo is your kind of highest risk category of, you are getting leverage exposure to volatile assets. We try to make it as safe as possible by protecting you from liquidation by our management strategies and enable those to be long-term holds by reducing the volatility decay impact. But it's the highest risk category to kind of get leverage access to volatile assets, but still it's in our lane. It's in our category of like tokenized, automated, managed products that you can just hold in your wallet. Except for boost, you can't hold boost in your wallet. Maybe that's the exception.
Dara, what do you think about all this? You see a lot of DeFi all the time, and particularly because you're a marketing guy, I'd really like to know, do you have any like advice or feedback to help JS be on the path to world domination and planting more carrots?
Yeah. Well, I mean, we're always curious to hear what the Carrot team is interested in allocating to, because that's, we want to understand this from a variety of customer profiles. Yeah, I mean, I think what I would say broadly is this is another example, levered looping in a variety of ways. There's a variety of flavors. Last year, we ran a strategy with Apollo, actually, and Securitize, where Apollo had this private credit fund, ACRED, and there were holders, tokenized private credit fund, and there were holders of this asset looking to get increased exposure, levered exposure to the underlying. And so we built an RWA looping vault. That's one side of the spectrum. I think what we're talking about on the Carrot side here is levered looping for assets a little closer to home, crypto native assets and things like that. And in that case, yeah, I mean, when you look at borrow demand, generally across DeFi, levered looping is a big part of it. The challenge is if you want levered looping exposure yourself, are you going to go do that? Are you going to go manage the position, manage the risk? Are you going to move in and out of the position, allocate to different assets in the case of, like, say, a vault, like a perpetual futures vault, where or a levered looping vault where you may be recursively getting leverage, but also levering up, levering down based on, you know, the market conditions, the risk profile. This is really exciting stuff that you can only really do on chain. The question is, what level of abstraction do you want? Do you want to do it at? Do you want to understand the details? You should at some level. You know, your docs, your UI, UX are critical. So if you want to go down to that level of detail, you can. At the same time, I think, you know, the other challenge on the other side is helping, you know, an individual retail user understand that wants a more complex product, understand how it works. That's always a challenge, but great UI UX is a very important part of that. Like, James, you mentioned that at the start, and you know, we take that very seriously as well. I mean, there's nothing more important than, one, being transparent about the operations underlying the token, the vault that you're operating, but two is being able to show those deeper levels of granularity. If you want to go down to which assets are being allocated to, where are you sourcing your leverage from, how do liquidations work? You know, one thing you can do as an individual, like I know the Rise Up community is very big on just being at the bare metal level themselves and exploring DeFi one-on-one at a very personal level. Read your docs, you know, your docs, your UI, UX explainers, your transparency. You don't need to be a quant to get a good sense of how transparent your counterparty, your partner, whoever you're going to for these products are. You just have to look and read, and then it's a question of how deep down the rabbit hole do you want to go, and are they making that information available to you? In the case of Carrot, there's a lot of good detail in that in the dashboard. I think that's the most important thing. So even if you're new to this, one, it's important to learn, and then I'd say two, you know, can you grok what's happening on the interface of what you're looking at? If you can't, you know, LLM it, ask the protocol or the team directly. That's a huge help. Like, that's also a function. How responsive are they in their community? You know, how quickly do you get an answer back? How clear is the answer? These are all signals that you use, you know, to assess, should I allocate to this thing or not?
Yeah, and I just think it's going to happen more over time, that people are going to want deeper DeFi strategies and not need to be a smart contract engineer to look up the blockchain explorer, or to have an accessible interface that they feel they can trust to get it. I'm sorry, JSB, I cut you off.
No, you're fine. I was just going to also give props to Gauntlet and like why a company like Gauntlet matters to us in the space, and like why it should matter to you in the space as well is, you know, though we like to believe that everything on the internet is true, and if it's on the internet, it must be true. Anyone can say whatever they please, right? And everyone's going to say my vaults is safe. You know, I've got this strategy. You know, it's almost like, man, I was doing this myself, and so I made it a vault for everyone to do it, which sometimes is always kind of a red flag. And we know that most yield chasers you're just looking at big numbers, and we could have a whole sidebar discussion on how APY is calculated and how fake it is for most people, and how do we combat against, you know, standardizing. We need to like standardize that so you can make sure you're comparing apples to apples. You know, not just saying like, you see this all the time, like, well, so-and-so platform is giving me 50% APY on my stable coins with no added risk. You're like, no. APY is an expression of risk.
Yes.
And so if you're giving me that, it is because there is a lot more risk, and that's fine. I get to choose that as a consumer. This is good. But by having a vault manager who is highly educated, deeply involved in the space, who knows what they're doing, can help prevent some of the pitfalls of frankly, like rehypothecation. You know, this is a big one I think most people don't see. You see these abstracted assets that are these wrappers around other stuff, and then you don't realize that all of a sudden this asset is backing this asset. Well, isn't that also this asset? And do we just triple account for the value here? Well, what? Hold on. And those are like fragile systems. And we've seen a number of DPEGs, and then they create these cascading waterfalls of like, oh, well, this one got knocked down because it was backed by this asset, which really was actually just a wrapper of this asset. But they both were thinking that they were the same. You know, it's like, I don't have to care about your balance sheet because I just care about mine. You gave me this wrapper that's this thing, and I don't really care that there's debt actually in that instrument because you're just showing me an equity value. No, you should care. And it does really matter because, again, risk management is it's proactive. It is not reactive. And so before you make a vault, before you decide to put assets into a position, whether that's a leverage position, a looping position, just an allocation strategy, so just like an aggregator of some sort or an index of some sort, you really need to know what those assets are. What happens when this asset depegs or briefly depegs? Like, what if it's just an Oracle failure? And then really it's worth 1, but it goes to 30 cents for 2 minutes. Well, what's going to happen to this vault that might have been totally solvent in a low risk category, except that some Yahoo on the internet thought 40% yield was the same risk profile as 6% yield and sold you a load of crock. That is why it matters that the risk manager is of a high quality with a great reputation.
Okay.
Thanks, James. Yeah, seconded. And I quickly add.
Please.
If I think the Rise Up community is very sharp. Like, you should be demanding this too, right? I think something JSP is alluding to is you should be able to see the breakdown of the yield of any given asset or vault. You should be able to see what is the native yield, meaning what is the yield generated from the underlying DeFi stuff that is happening in that vault. For example, for a borrow lend vault, say on Morpho, you should be able to go see which borrow markets is this allocated to, what is the general activity on those borrow markets, and then what are those borrowers paying to borrow the assets that are being lent from the vault. And at the same time, right, before token incentives. Token incentives are important too. It's just then a function of figuring out, okay, how are those token incentives distributed? For example, Gauntlet, we built a multi-chain, multi-protocol, multi-strategy stablecoin vault, Gauntlet UST Alpha, and we auto-redeem any rewards that we earn or that the vault earns when it allocates. And that's just one level of abstraction that helps users who don't want to separately, right? This power of self-sovereignty. You can claim those native token assets, which is great. You may be bullish on the underlying, you may sell it or switch it back into USDC or put it back, reinvest it yourself, or there are opportunities where you can do this automatically. But yeah, it's very important to understand that breakout and where is the yield coming from? If you don't know, it's you. But more often with a reputable product, you'll see where the breakdown is coming from.
Okay. Speaking of reputable products, what are you laughing at?
Dude, for the last, I don't know, for the entire show, there has been this like thread of back channel talking and comment talking about Evan's thermos and how loud it is when he pours the drink. And I've been keeping it together because every time I see one, it kills me. And then I just see Jeff Rascal say, just when we all thought the thermos was empty.
I'm so sorry, you guys. I think this is contributing to I think that my phone mic is somehow on, or because I have this mute button that's supposed to my voice, but I don't think it's working.
I don't think that's working, but we'll add that to the Rise Up lore, where it's whenever Evan pours his thermos, a waterfall erupts behind everyone's ears.
Oh, I'm dying.
Okay, so we've got some numbers coming in that we will get to in a second before we close out the show, but I feel like this is a natural place to pivot to talk about how Gauntlet does it. We showed the mini app earlier, and you curate vaults not only for other people and help other people with their risk management strategy. You said a third of all DeFi? Is that right, Tom?
Yes. Approaching that. The number of DeFi TVL has been up and down over the last several weeks and months, but yeah, generally.
Okay. I just say that to draw attention for people who are like, hey, who are these guys? I'm going to go watch somebody who's going to tell me what token I should buy. Like, listen, if you're trying to learn about cryptocurrency on the internet and you want to understand, you want to get close to people who have levers to pull or can give you a lever to pull, this is a conversation you should be part of. So I'd like to look into that. Alex has got DeFi Llama up on the screen. Is this the Gauntlet profile?
No, this is just
this is all DeFi. Yeah,
all DeFi. Yeah, I was going to say 95 billion. I was like, wait a second. What are you looking at, Al?
I was just looking at Dara commented on the up and down of total DeFi TVL, and it is certainly up and down. And at this point, obviously, we're bleeding.
Yeah. So, but to think about it, like in context, if you're hearing that name for the first time or you're scrolling on us for the first time, Carrot, the protocol we just went over, this is like a business offering you particular services, and Gauntlet is like though Carrot does B2B stuff too, this is like more of an enterprise B2B. They're on more chains, more places, more generalized, though you have many specialties. And again, I just want to give you a bouquet of roses to say a third of all people moving money on chain to generate a yield say, you know what, we should call Gauntlet. So like, let that just be a exclamation point stamp of approval for you. And you've got these vaults that you've launched through the mini app that are kind of like, instead of doing it for other people, now you guys are doing it. But I would love to hand it to you to say, if I'm coming on your page for the first time, I'm at gauntlet.xyz, never been here before, just hearing about you, and I want to explore. As a retail user, what do I need to know? What should I look at?
Yeah, absolutely. So, I'd say first, you're right. Gauntlet's not a consumer-facing company. Our goal is to build these strategies for institutions that have a lot of B2C customers and users, whether they're custodial or non-custodial, more on-chain or more off-chain. But I'd say if you're a sovereign individual, a Rise Up community member, and you got a wallet and a dream, and you're thinking about, rightfully so, what portion of my blue chip assets do I not necessarily want to just hold and have deep in cold storage, buried somewhere, and I want to put those assets to work. What I would recommend you do is, go to gauntlet.xyz, go to Vaultbook. I'll say this. I'll say this as a prudent, humble farmer myself in previous cycles. I never went too crazy on the leverage spectrum or too deep down the rabbit hole. I would usually stay at protocols where they were reputable, they had a track record. I understood or were bullish on the incentivized native token. What I would say is do this. If you're one of those people kind of in that same universe, go to vaultbook.gauntlet.xyz before you go to app.gauntlet.xyz. Check out both, have them up. I know a bunch of Rise Up users have dual screen set up. Put one here and one there. And anything you want to know about how we think about earning our customers, our users, our capital suppliers a lot of yield and doing it in a sustainable way through market cycles is all here. You want to know, how have Gauntlet vaults performed when the market's not so hot, when there's a major downturn or a long tail event? We have a bunch of math nerds for a reason. We produce quite a bit of quantitative research detailing our risk models, our risk methodology. We can't give away all the secret sauce here, and you to look at it, be like looking at the face of God. You don't need to look at the math. What you do want to understand is just framework-wise and track record-wise, who is my curator? Who is my risk manager? And if you don't have these details, by the way, if you're looking at an asset where this level of detail about methodology, risk profile, how it works, which protocols, if you can't glean that stuff, you're probably looking at something that's not tenable depending on your risk appetite. And what I'd say is this. So read through how we think about this stuff. And then when you're ready, go to app.gauntlet.xyz. You can see all of the yield strategies that we build across DeFi, across multiple protocols, multiple chains. Whether you have an asset in particular, you have a risk profile you are looking at, you have a protocol that you favor, you can go filter through our 70 plus vaults across 1.4 billion in TVL and find the right vault for you. You can see we've added super goated product team that we have. We're very fortunate to have at Gauntlet design folks. They've made it easy for you to break down which asset, which chain, which risk profile, and then you go from there. There are a variety and flavors. If you ever have questions about these vaults, by the way, please, you can DM me on Twitter at Dara_con. You can DM Gauntlet. Someone from the marketing team will pick up. We're all terminally there all the time. Or email us, support@gauntlet.xyz. I don't know how many risk managers have a contact us form, but we do, and we take that extremely seriously when we field questions, and we love to get questions about this stuff. We love when individual users ask us a question. I guarantee you 9 times out of 10, even if one of us that feels the first response knows the answer, we will share it with the quants. I think that's one of the most exciting things about Gauntlet is it's not just math nerds doing important stuff in the background. That's part of it, but they care very much about what's happening, what are customers saying. That's both institutional and individuals too. So that's what I would recommend. That's the field manual to getting started. And of course, Rise Up community, please hit us up if you have questions.
Yeah, I am sure that people will have questions, but that's a really good primer. You are not going to break this site. You can spin up a new wallet. You can check around. You can ask in the community what folks are lending, what folks are doing to earn, what strategies they're deploying. That's community.rumshq.com. And if you're a first-time learner you don't even own crypto yet, that's totally fine. If you're curious or skeptical, that's fine too. There's no such thing as a dumb question. We really would be happy if you would trust us to help you because, there's a lot of pitfalls, a lot of scams, a lot of schemes, and you should just save time and money instead of trying to go it alone and figure it out yourself. You need to get in a group of other crypto users who aren't going to try and sell you some junky token. And for us, that's what this is. So we want to do a round of final thoughts, questions, suggestions. We'll share your links one more time. Before we ride off into the sunset on our dogs and ponies, if you've got one, leave it in the comments. If you're listening in the future, hold tight or check out the description. We'll give you all the links to follow up with everybody on the show. I would also like to pivot in a second to just get a quick update from you, Will, because I know we got some numbers today and they might be important.
Yeah, they're surprisingly bullish, and the market turned around completely on a dime as soon as this news came out. Things are looking bullish in the short term, at least, with a very shockingly good jobs report that came out for the month of January. Everyone, including myself, was expecting it to be bad. We were expecting to only add 55,000 jobs to the U.S. economy, and we added 133,000 jobs. Now, that number will get revised, whether up or down. The trend has recently been down, but regardless, it's going to beat those expectations by a pretty wide margin, even if it does get revised down. And that's a surprisingly good thing. So it fixes the biggest issue that asset markets had, the stock market and crypto, which was the Fed was between a rock and a hard place, which was a lot of really bad jobs data in one really bad inflation report that came out last week. And because of that, they were in a position where we can't do a single thing. And so we have been up until recently rooting for bad jobs reports, because it would mean the Fed would have to cut rates because inflation was cool. Jobs report was bad. The Fed will cut rates to try to make employment better. But now with both things bad, the Fed was stuck in a bad place. So before we were rooting for a bad US jobs report, but now we are rooting for a good US jobs report because it gets the Fed out of this rock and a hard place, this Charybdis and what was the other? Oh my God, it's an Odyssey. Oh, I forget it. It was a very nerdy reference as to where rock and a hard place came from. It's from the Odyssey, between Scylla and Charybdis. That was right.
Damn.
Yeah, that's where the term rock and a hard place comes from. Thank you, Homer. And we are all nerds. And so now that one of those pressures was alleviated, there's a little bit less worry as to what the Fed might do, at least in terms of doing nothing. So now, crypto kind of exploded off of this news. The stock market opens in 8 minutes. I imagine it's going to do pretty nicely as well. Personally, I closed my shorts that I opened last night and made some money. Huzzahs. And now I'm just kind of reevaluating things. And Solana actually looks pretty good. You could go open up a long, or you can go buy some Turbo Sol for a little bit. But again, do your own. Don't just trust me. Do your own research and analysis. Make your own decision and all that kind of stuff. So those were the numbers. Also, I would like to add that as I have been new into my leverage trading experience and trying to build a strategy that works and all that kind of stuff, the idea of just using turbo products is I think the number one place where beginners should go and start. And I put out a tweet like this, JSP, I know you saw it, but it's the stress of managing a fully leveraged position is very high. And also I had an instance where I placed a short on Hyperliquid specifically, and I was like, this is going down. But it went up at first before it went down. I didn't properly manage the liquidity. I didn't set a stop loss for it too, because I was like, I'm super confident this is totally going down, and I was right. But it ate half of my position because the margin on the account wasn't as good, and I wasn't managing it. I wasn't looking at it. And, you know, just being able to have someone manage that process for you, you don't have to be hands-on with it. You can just be like, cool, I think long, I think short one day. JSB, one day, think short.
Yeah.
Short.
And, you know, and then just play your trade, right? You don't have anything else to have to do, is really nice. And I really, really, really do think DeFi Carrot is like the best place for new people to go get started. Because even though I'm new to leverage, I'm a very experienced trader and investor. And, you know, so like I'm coming in with a lot more skill points to place on my leverage character, if you will, for talking D&D or RPG. So that's what I want to say. Just like DeFi Carrot really makes it easier.
You know, it's interesting. Maybe follow-up question here. Your thoughts. Sometimes I feel like the turbo product can be in no man's land. And what I mean by that is if you are a trader and you know what you're doing, you love a perp text. In fact, you like expressing a very unique opinion about an entry point. You're familiar with the interface. You like stop losses and take profits, and you know what those are, and you're not intimidated by it. Versus someone who's scared of that. You know, part of the product idea is like, hey, is there a population of people out there who like the idea of expressing a bullish opinion more than just holding spot, who are afraid of using a perp text for good reason, that we can give them access to express that opinion with the guardrails in place. And potentially it's a no man's land, because the people who are here, consumers new to DeFi, new to on-chain finance at all, who've never thought about options or thought about leverage or thought about anything, you know, buying spot is already scary enough. You know, might not be into taking leverage, and fair point of view. So sometimes I do think there's potentially like this middle lost ground where like it sounds really great, but does that user base exist for somebody who was graduated from I hold spot, and this already feels a little scary because it's a super volatile asset. I've never held a super volatile asset. You know, I hold QQQ, which obviously is kind of volatile these days. You know, am I willing to take the next step into turbo Sol? I hope so. I think so. But you know, that is like about self-critique of, you know, did we build some sort of product that is in no man's land for, you know, who really wants that?
I think there's a sizable group of people who have been spot traders, but leverage really scares them. And so being able to provide something that is simpler to manage, and then also doesn't provide access to like really more than like 5x or 4x leverage in most cases, is like really nice. Like, okay, cool. I'm not scared about this. I feel like it's a place where I can kind of train myself, and I don't want to really be exposed to high risk of being liquidated, because I want some risk, but I don't want risk with a capital R, you know?
I want to sleep at night.
Yeah, I want to sleep at night. And, you know, I mean, like Alex is that guy, you know? And so,
except
you know,
I don't
for
sleep
me,
at night.
yeah, except he doesn't sleep at
Different
night.
reasons.
And, you know, someone who fits my profile is probably going to go to, you know, a more advanced environment. But like, I also am traditionally a spot swing trader. Like, you know, I only have a small percent of my portfolio, and I'll only ever have a small percentage of my portfolio exposed to leverage markets, because it's crazy. It's a risk with a capital R. I don't necessarily want a lot of exposure to that. But if I really think the market's bottomed, and everyone knows I love Bitcoin, Ethereum, and Solana, I'm probably going to go get some turbo products, you know? So it's like, if I'm really confident we had a bottom, I'm going to go buy some turbo Bitcoin, turbo ETH, turbo Sol. And I'm going to have some of my portfolio exposed to that. So even though I, on paper, might not be your ideal customer, I'll still totally use it, because I view it as a means to manage risk across a spectrum in my portfolio.
Yep.
Okay, and let me just give you the Gauntlet side of this too, because while you're doing that, I'm over here playing with the Gauntlet mini app. And if you're somebody who, you know, like is looking for the next step, a lot of people are looking at staking, for example, as their first way to get into DeFi. So then they learn about restaking, and they hear about looping, or they hear about leverage. A lot of people I see get excited about providing liquidity, becoming the supplier of money that people swap in and out of. And there's a strategy right here. Check this out. While you were doing that, maybe the idea of providing liquidity is scary to you because you don't understand impermanent loss. You've never done it before. You have to give 2 tokens and maybe you only have 1. I would treat this as like a companion to DeFi Llama. I've got DeFi Llama up. I've looked at the pools on Carrot, and maybe I'm looking for something else to do with my USDC on the Solana network while I'm waiting to DCA into Turbo Sol. I see that Jupiter, the popular DEX, has these opportunities for me to provide liquidity, but I've got to put up 2 different tokens. Some of them are volatile. They're doing a lot of volume, but I've never really done this before. I don't know how to adjust the parameters on like, when is my liquidity active? What does that even mean? So I tell Gauntlet, I've got USDC. It's on the Solana network. And well, look at this. I've got a trading strategies pool here. JLP1. 13.39%, not so bad. I don't feel so bad about that at all. And it is a liquidity provision strategy, but they are managing it for you the same way that Carrot is managing like the liquidity threshold, the margin. This pool is allowing you to participate in that kind of activity without the hassle, frustration of, wait, is my liquidity active right now? And you can see all the stuff just like Dara said right here. Did I get that right, Dara? It looks like you've got a couple of these JLP pools and several pools that allow you to get exposure to trading strategies, meaning some kind of liquidity provision. Yeah.
Yeah, bang on, Evan. These are our perpetual futures vaults. You can find them. If you click through, you'll go to the Drift protocol where we build these strategies. Yeah, absolutely. So our perpetual future strategies are more advanced. These generally, again, you can go to Vault Book, read all about them.
Yep.
But generally, we'll be looking to offer delta neutral exposure to the market, meaning we will take a long position and a requisite short position, and then do that by allocating to different perpetual futures opportunities. Yeah, like if you click through and go to Drift, you can see more details on the protocol about the vault itself. You can look at the historical returns, which are returns or ROI, which is typically more risk on. So that's also, depending on the market, the performance of these vaults can vary greatly. But generally speaking, we seek long-term appreciation here by allocating in and out of perpetual futures positions, not too much unlike our borrow lend vaults, except here we're talking about different asset class that we're allocating to on Drift, including hedge GLP exposure.
Yeah, so there's like a strategy for every risk appetite, for every chain. This is totally going to look different for every person who's playing. Every farmer is going to take a different approach. And if it feels intimidating, again, I would invite you to take these guys up on their offer, ask them your questions, and ask us your questions if you've got questions in the comments at community.rumshq.com.
Whoa.
JSB, I see you going back and forth in the comments here about the short token.
Oh yeah.
Do you want to address it because we've picked on you about it? When really can we expect it? Or what's the challenge with it? Because I'm sure there are challenges.
Hopefully the looping made sense of I'm bullish on Sol, so I buy Sol to borrow against it to buy more Sol. That gives me greater Sol exposure than how much money I put in to get it. Makes sense.
Yep.
To run a short, you can do the same but opposite. So essentially, you are borrowing Sol. I can't persuade. You are borrowing Sol against stablecoins. And so if you believe, so now your debt token, instead of being dollars, your debt is now Sol. And so if Sol goes down, your debt is now worth less. And so your overall equity value has gone up. So that is how you would express a short position. And so it's totally possible. In fact, it would be kind of nice because it would generate yield for the Sol on the other side, because now you're borrowing Sol, so you got to pay for that borrow. I would say the reason we haven't done it yet is, in general, the ethos of the product is about expressing like long-term hold sentiment. Though it was, you can have a long-term sentiment about being short the market just as much as you can being long the market. Because it's token ownership, the short always felt just a little different maybe, of just, the intent of go long, be bullish.
It makes sense. I understand the reasoning there. I think for me, the reason I would say that it's a good product to consider is more of a participatory thing. Like, the nature of real DeFi is that there are all these money vehicles and money tools and things that some people are allowed to do in order to use their money more efficiently and effectively to make more money for themselves. And the reason that that sucks is because the vast majority of people are gatekept from participating at all. So, informed choice into some sort of money vehicle is the best part about DeFi, in my humble opinion. So having it that exists there, I don't think says any, because you asked me before too about, listing specific turbo tokens. Would you take it as a tacit endorsement from the platform? And my answer at the time, and I would stand by this, is no, not really. I would take it as like, hey, in the spirit of decentralization and DeFi, you should have access to things and be able to make an informed decision about whether or not you want to participate in it, not be, shoehorned into something specific just because this is all you're allowed to do. Like, I think it's so funny that we're sitting here talking about, like James, you pointed out, and we were all talking about where does yield come from, the proverbial question. And it's funny because we never asked that question in traditional finance. And if people built a DeFi protocol that worked the same way that a TradFi financial institution works, we would all be terrified of how long until this house of cards comes collapsing down. Like, we hold ourselves to a very high standard when it comes to, allowances for rehypothecation, or, how many times is this getting used, or wait, that asset's backing this asset. Isn't that sketchy? That's how, traditional money works all the time. And, the thing that makes DeFi the coolest thing I've personally ever encountered from a tech and money perspective is that it's like, hey, these tools exist. Here you go. Have at it. Learn what they do, and then you can participate too. I think that's the magic.
Oh, totally. Maybe one thing that we have to consider, and this is, I think, a good thing, is like, we're a vertically integrated product ecosystem. What I mean by that is I can't just think about Turbo. I have to think about CRT, and I've got to think about the borrow lend protocol. And so even for the short to exist, requires that you have SOL to borrow. And so where does that SOL come from? Well, that SOL comes from people who deposit into Turbo. So now you have this dynamic relationship between the two, where like your supply and demand does matter. Of when I have redemptions on Turbo, is it available for someone to come redeem, and I can do it right now because that SOL underlying is not being used anywhere? That's super easy. Yes, it's always available. It's fully liquid. Once you have a short token, well, now there's a portion of the deposited SOL that is being borrowed in order to express that short position. And so in order to handle redemptions, it's all possible. It just adds a layer of complexity to the system that you have to be aware of. And now is another thing to manage for making sure both products work as expected.
Okay, we have done it. We have gone over time. I want to be really respectful of you guys and enforce a strict round of final thoughts. We will do them one at a time. And Will, I see you've got a sort of breaking news update, and I know you have to go too. So can you tell us what's the news about Uniswap? Give us a final thought before you ride your dog off into the sunset, brother.
Yeah, BlackRock bought Uniswap tokens, an undisclosed amount. Remember, Uniswap is a governance token within the Uniswap DeFi protocol. So BlackRock is officially getting into the DeFi space. Having bought Uni tokens, I'm sure they will be a very active voter within Uniswap, an undisclosed amount. However, they do tend to love owning about 40% of companies. So that's kind of like their MO. So, they probably bought a lot. And Uniswap is up 22% off of that news coming today. So, if you had bought the bottom perfectly, yeah, maybe Carrot too. If you bought the bottom perfectly, Uniswap, not a bad idea to take a little bit of profits. You're up over 20% on the day. Just a thought if you're that lucky person. But yeah, pretty crazy.
Oh my gosh. I bought it as we were dipping the last time. I added a position and watched it go past $4. I caught it at $4. I was like, this is a great price, and it went all the way down to $3 whatever, and now it's back up over $4. So I might have to be that guy. Alex, do you have a final thought?
DeFi is inevitable. And I'm excited to have you guys here because anytime we get to talk to people who are helping build that inevitability, it's a good thing.
Excellent. Dara, how about you? Final thought for you?
Institutional adoption is great for DeFi and great for individuals, no matter whether you don't care or want to know what a stablecoin is, or you're a sovereign individual very close to the metal of your own wallet and DeFi itself. Institutional adoption is good and I think inevitable.
Okay, I'm going to rug everyone to say I want to have both of you at some point just to do a DeFi as it relates to policy discussion because it's very off topic for today, but it's my current fixation after basically reading all of Genius and Clarity in all of its various forms, and I have a lot of thoughts, and I feel like that would be an interesting conversation. So let's pencil that one in for some point in the near future.
And James, have you got a final thought for the audience?
I do. In this future inevitable world of agents doing everything for us, is going to be more and more important that you don't confuse execution with curation. And just because agents can do it and they're capable of doing stuff that you think you've set them to do, does not necessarily mean that you are getting the same level of risk management and protection as having smart humans behind it. And even though I do firmly believe that over time we will see agents do stuff that Carrot's doing for you, there will always be this need for the human element behind it. That's not just automated and agents running around the world and doing everything for you. Though I do think we will continue to see a lot of innovation there and a lot of exciting things that people will build, which truly I think represents what is permissionless finance all about. I mean, it's almost like that to the nth degree.
Yeah.
Hey, I'd like to actually show
Go
one
for it, go
more
for it.
thing. I'm so sorry, but
Rug me,
just
Daddy.
I just want to direct everybody to this hourly candle we had here in Bitcoin. The good news for the good jobs report came in. Candle flies upwards. Now it's getting slammed back down. So whenever this type of news comes out, it is always a good idea to just wait and see how things go.
Well, I'm
That's all.
appreciative
That's
of the
all.
patience and the reminder, but I'm trying to get off the show so I can like neutralize the loss on my Uniswap position in order to buy the dip again. Okay. You understand?
Get in there.
Listen, if you want to find our guests and friends of the show, then you can catch them wherever you are, whenever you listen. But probably the best way to get in touch is going to be over on X at Gauntlet_XYZ and Dara_Khan, Khan. You can find DeFi Carrot at DeFi Carrot, and James is at JS Blair. They would be glad to hear your feedback. I'm sure if you have questions for them, we can reach them, and we definitely will have them back on the show again. We have got Rise Up After Dark tonight where we can unpack, debrief, maybe drive through some of this stuff. It sounds like it's going to be a big day in the market, so we can unpack that too. And if you've got another crypto question, a suggestion, a good joke, a word of wisdom, a prediction, or something else, then, you know, we want to hear that too. We're grateful to you because you're the best part of what we do. So until next time, my friends, thank you so much. Everybody, stay safe. Be well. Everybody, rise up.
See ya.
See everyone.